Hi there, welcome to 3 Minutes with Jay. Jay Bala, our portfolio manager at AIP Asset Management in Toronto. What is an investor to do in this type of market? I believe that finding higher highs is going to be tricky. So
Right.
what should we be doing?
I mean, and we know we've always reiterated this patience. Like, have the patience not to risk too much of your capital. And so, if you look at a lot of the portfolios we've built out, it's we're over allocated to short-term bonds, to cash, to safer investments. And it's not like we're not invested in the equity markets. We're just a lot less exposed to it. So, if sort of the target allocation was, call it 50% bonds, 50% equities, we're probably at like 30% equity to 70% bonds, right?
Right. So it's not push the chips into the middle yet.
Exactly, right? Like, you don't want to rev it up now. It's just, you want to just sort of go through it. I mean, at the end of the day, no one can predict what's going to happen tomorrow, but it's better to sort of invest safely rather than try to sort of chase returns and then end up getting burnt, right?
What about when everybody's back from holidays and we have September roll around?
There's going to have to be some concrete catalyst to move the market higher, right? Like, you're going to have to have some great earnings come out, or you're going to have to see some great growth numbers come out. So the two sort of central pieces we're still looking at, and which is, coming in that sort of fourth quarter, is, the announcement from the European Central Bank on whether they're going to be reducing their quantitative easing. I think currently they're doing about 80 billion a month. And the other one, of course, is the official unwinding of the Federal Reserve balance sheet, which is sitting at about $4.5 trillion. And, there's been sort of, I wouldn't say rumors, but they've talked about it a bit, saying that, in the future, we're going to have to wind this down. Which effectively means we're going to have to sell these bonds back into the market. They haven't provided any guidance as to how much, when, how long will it take, all of that kind of stuff. Right. But that'll be coming in the next few months. So, it should be an interesting fourth quarter, right?
Yeah. Hey, do you think they'd let me print 80 billion for a month? I'm good for it.
Only if you issue Thomas bonds and then buy those.
I'd be happy to pay it back one day. No, really.
No kidding, huh?